Hello, welcome. Today we are having a special edition of Traders Talk because I am so lucky to be able to actually invite my fellow trader, Lily, who is a Kashi Koi trader. She is actually very experienced in trading, and let me put her up, and she will be actually sharing today with you some trades, and some strategies where you can actually use yourself to actually trade on options in the stock market. Let's bring up Lily. Lily.
Hi, Ming Hong. Thank you so much for having me. And really, I think you are more expert than me. Honestly, really, I think so. You are
No
like
lah,
my.
you are the expert.
I think all of us have different
uh,
strategy. You are really
yep.
good with selling food. Yeah, for me, it's
Uh,
like a mix lah,
I'm the
basically. Yeah.
I'm the stingy trader lah. Don't want to pay to for options one. Only want to collect
Okay.
money.
I think so. I also want to
Uh,
like everybody wants to make
uh,
money options. Yeah.
uh-huh.
So yeah. So tonight I'm going to share because I think a lot of our sites, especially we are talking about option trader, right? Yourself and myself. Sometimes we always wonder which is better. You know, do we want to buy a call or sell a put, right? So for tonight, I'm going to basically share this as well. Should we buy call or sell put? So for my example, I'm going to use Microsoft, right? Microsoft stock, and we know that Microsoft is trending up recently. And why I use Microsoft stock because it's really is a good business. Yeah, and it's also in the S&P 500. So let's without further ado, let me move on. But again, just a little bit of disclaimer. I have not prepared the disclaimer slide, right? Whatever I share here, and I believe what Ming Hong says as well, whatever we share here is actually just for educational purpose. You can actually do your own back test or do due diligence here. But for myself, when I did a back test for this, I really find that certain strategy is better than the other between these
It's
two.
a
Yeah.
it's a learning session lah. I also want to come here and
Yeah.
learn. You see myself.
Yeah. Correct. So it's a learning session for all of us. Yep. So right. So why I mentioned I use Microsoft, right? If you look at you zoom out to 5 years, like at least for 5 years, you really look at it that the stock actually is actually trending up. Yeah, it may zigzag here and there, drop down, go up, but this is actually natural for any stock, right? So,
Microsoft never
but
come
in
down lah. When did they come down?
well, actually this is one I did was a while ago. Actually now actually spike up even further. Yeah. So this stock is really good, and I'm waiting for opportunity to go in. Yeah, because I did not go in earlier, but I'm really waiting for opportunity to go in as well. So if you were to zoom into let's say 1 year, and if you realize I put in the two so-called these two trend line, right? So
And as
basically I
Lily, you I cannot see. Wait. I forgot to share your screen. Wait.
oh okay. Okay.
Okay. Yep. Ah.
Okay, can ready? Or should I go back?
Yep.
No
Yep.
need
Yep.
lah,
Yep.
huh?
No.
Should I go
This
back one
is
slide? No need. This
uptrend.
okay,
This
this
is a
is good. Yeah.
second. This is a slide. Yep.
Yeah. So you realize that when I zoom into 1 year, right? This is actually the trend line that I draw on. Okay, and it's like up, down, right? So this is very natural. So when there's up and when there's down, that's when option traders like us really love it because we get the opportunity to go in, do a trade, come out, do a trade, go in, do a trade. It's a rinse and repeat. Okay. So later on, I show you what I mean. So this is uptrend is generally the high get higher. Okay. And the low also gets higher as well. Right. So let's look at buy call. When January 19th, when I do a back test, right? That is when it's near to the support or near to the bottom, January 19th. So we look at this buy call first. So buy call on January 19th. The last traded was 216. And when we do a buy position in options, normally I think Ming Hong knows, we normally do not do it too close in terms of the date to expiry. This 150 here is the date to expiry. We want to choose at least above 120 date to expiry, so about 4 months or so. But if you have a bigger budget, maybe go for 5 months or 6 months. That would even be better, yeah. But for this example, I'm going to use only like above 120 days. So it's 150 days for here. So we do a strike price of 215 because the last done is 216. So I do a 215 instead. Because when you do a buy call, normally you want to lock in the current low price. Yeah. So and it's no point locking in at something that's higher. So normally you want to lock in at something that is lower than this because there is no 216 here. So we lock in at 215, right?
Yep.
And just like when we buy anything, when we buy a buy call position in options, we have to pay. So in this case, example, right, I have to pay 1.6K for this position. Now,
1670.
yeah, 1.6K, correct. So this would become my initial capital, okay? I will show you later on how this initial capital actually grows, okay?
So
So
basically, that's like 8% only, 8%.
Yeah, okay?
So
So
you
it's
only
only,
pay 8% to control 100 shares as
yes,
compared to paying
yes,
$21,500
correct.
to buy the share. You only
Yes,
pay $1,670.
yes, correct,
Okay,
correct, correct,
good deal.
correct. Yeah, good deal, good deal. So fast forward to February the 3rd, right? When the stock price for this Microsoft has actually gone up, okay, to something quite high. To me, probably it's near the resistance, right? So because I may not want to own the stock. So what I do is I close this position by selling this contract back. Yeah. So when I sell the contract back, I actually collect 3.5K. Yeah. So 3.5K to collect it. And when I go to net off what I pay upfront here, my profit is actually 1.9. So you look at it, 1.9 and what this is what I paid is really more than 100%. Just
In
for
1 month,
not even 1 month, 19th to 3rd of Feb.
19th
It's
until
about
3rd of Feb,
it's about
about 3 weeks.
2 weeks, 2 weeks,
Or,
max 3 weeks. Yeah. Okay. So
okay.
it's already 3.5% for I mean for this particular Microsoft stock but not necessarily all the stock will behave like that. It really
But
depends. But
what is your
generally the concept is like
criteria?
that.
Maybe you can explain to the viewers when you actually go into buying this call, what is
Mm.
the criteria? Only uptrend stocks going into retracements or what?
Yes, yes, correct. That's why I started off just now. Firstly, the
Mm,
stock must be good business, uptrend
yeah.
stock, and then like Microsoft is among the one of the top so-called 500 stock in S&P 500. Yeah, but not all the stock in S&P 500 will behave like that. Yeah, so
Okay.
has to be a strong uptrend,
Okay.
uptrend stock. Yeah,
Yeah.
so and I mentioned I went in at near support or at the
Mm-hmm.
bottom, and I
Mm-hmm.
get out at near
Mm-hmm.
resistance at the top. So that is
I
my
see.
criteria. Yeah.
Okay, so basically the first thing which you actually look even before you look at the chart, it has to be a very strong company, which
Yes.
fundamentally would be very
Sound.
sound. Okay.
Good
And
business.
then after that, you start to actually look at the charts
Yes.
to
Yes.
see what is
Yes.
the price action or what
Yes.
is the pattern like.
Yes.
If it is actually going
Correct.
all on uptrend,
Correct. Correct.
meaning 50 EMA above 150 and 150
Mm.
EMA above 200, right? That is
Normally,
actually
I
a
don't look at the
long-term
EMA
uptrend.
lah.
You
Normally, I
don't
don't
even
look
look
at
at the
the EMA.
EMA.
Normally, I don't look at it because I draw the two trend line, then I use that
I
as a guide.
see. I
So
see.
simple, right?
You are the kind of how to say a simple, because there are a
Yes.
lot of traders who actually really look at a lot of indicators and all this before they actually do things. Okay.
No, I don't.
And you are the one who is simple. Okay, you are even
Yeah.
simpler than me, because I myself when I actually trade, right, I already very lazy. I also don't see a lot of indicators. What I
Yeah.
see is only the moving average, and
Yeah.
then probably a stochastic.
Correct.
These
Correct.
two
These are standard
indicators
lah.
only lah.
That a lot of
Two
people do.
indicators
Yeah.
only lah. The
Yeah.
other ones I
Yeah.
don't really bother to
Yeah.
also look at it
Yeah.
lah. Too much lah. I
Yeah.
don't have so much
Yeah.
time to
Correct.
actually
Yeah.
do
Correct.
it.
Correct.
Yeah.
Because why not, to me, firstly the stock is really very fundamentally very strong, and
Yeah.
the trend is really going up.
Okay.
So
Yep.
if you
Yep.
just follow the
Mm.
basic, you know, support resistance, support
Mhm.
resistance. You do the necessary, you're okay. To me, like at least when I do this
Okay,
backtrack,
that is correct. I agree with you.
yeah,
Don't complicate things. Make things actually simple. Make things actually
yeah,
simple.
correct.
And of course, if you are going especially on the fundamental strong stocks, the simpler it is already strong, man. I mean, what else you want to actually
Yes,
see?
because the
Yeah,
fundamental is really there.
yeah. Okay,
Yeah,
Cindy has a question here, Lily.
yeah.
For buy call, do you look at delta and open interest?
Yes, open interest, yes. But
Mm,
don't forget, this is a strong stock. And
mm.
this strong stock,
Generally,
I mean, open
very
interest is
liquid
very
one.
high already. I
Very
always look at
liquid.
the volume. Yeah. That's
Yeah.
why first I start with strong stock, good
Okay.
business. So but once it's there, they will have a lot of
Okay.
volume, open interest will be there. So it's easier because
Correct. Agreed. Generally, lah, I mean, to add on, uh, uh, all the popular stocks, lah. I would say popular stocks means like all the no more Fang, Meng.
I haven't I haven't checked all the fan
The
yet lah.
main stocks are that means the stocks like Meta or Facebook, Amazon, Apple, Google, and Netflix. Yeah. So these are like the popular stocks,
Correct, correct,
generally
correct.
very what is that liquid one. Microsoft,
Yes,
very liquid one. Yeah.
yes.
Unless you're actually trading all the not so popular stocks where you don't even know their names, then you might want to see their open interest before trading, or
Yeah.
the other thing we should actually see is just look at the spreads lah. That means the
Mm.
bid and ask spread. If you look at the bid and ask spread, if it is actually very wide, then of course you can say that the liquidity is actually very low. Yeah.
Mm. Mm.
Okay. What
But
about
actually,
delta?
yeah.
Delta.
Sorry. So
There's
I
another
like I said,
part
I
of the
don't really
question.
look into that.
Delta.
I don't
Cindy
look
was
into
actually
that.
asking about. Okay. Or you don't look at that,
I,
but
I don't.
basically you are just doing it close to at the money, which is at the
For
stock
for
price.
this, yeah, I'm just doing
Yeah.
it at the money. Yeah, because for
That.
me, buy call, I always do it at the money.
Mm,
Yeah,
mm,
even if I were to do a buy put, right, I always do it at
mm,
the money. I don't
mm,
go
mm.
beyond. Yeah, yeah.
Okay,
Okay, so it's very
so
simple for me.
basically that goes around delta 50 lah. Yeah.
Yeah. Okay.
Okay, good.
So I move on.
Yep,
Okay.
sure.
So like I said, we do a comparison, a buy call and sell put, right? So now let's move on to sell put.
Yep. So
So
buy call
sell
make
put,
113%. Remember, guys. Buy call make
because your capital is
113%.
very low, ma. Your capital is
Capital
very low,
is
and then the thing is that
yeah.
the capital is very low, and touch wood, like let's say, unluckily the stock suddenly go against you.
Yep.
And then you forgot you cannot react in time. Yeah, maybe you're
Right.
sleeping, you cannot react in time. At most you lose is only 1,006. But
Yep. You
if
won't
it's
lose immediately. I mean, to lose the full
yes,
1,006 on Microsoft,
correct.
Microsoft will have to die very miserably.
Okay. So okay, let's do a sell put, right? Sell put, okay, of course sell put on the same date than January 19th, because it's near resistance. Let's say
Yep.
we go sell put, right? Okay, so sell put, we look at short DTE 31 days of 31
Yep.
days, because sell put
Correct.
normally time decay would work against, I mean, not for, I mean, in our favor if the DT is very, very short. Yep. So for direct comparison, I use the same strike price of 1215. Yeah, I don't want to do late because otherwise it's quite difficult for me to do a
Yep.
direct comparison and buy and
Correct.
sell, right? So, and for sell put, one of the beauty of sell put is that when you sell, you collect money up front. So in this case, I collect 652. One contract is 100 shares. So 652 times 100 is 652. Yeah. But when you do a sell put, right, you must always remember is that you must have the mentality to want to own the stock. Why? Is because when you sell put, if unluckily or luckily, depending on how you look at it, right, the stock goes, in this case, let's say it closed, when I sell put on 19, right? Let's say the stock here on 19 of Feb, it closed at, let's say, 210. Means to say that I will be assigned this stock at 215 per share. So I have to pay cash of $21,500 for this, right? So that's why you must don't want to, or you must be prepared to own the share. But because it's Microsoft, let's say if I sell a put position and if I have this cash to pay, no problem, because ultimately Microsoft being a strong stock, when you own the share, you can still sell it back in the market.
The
Okay.
mentality is different lah. I mean,
Yes.
okay,
Yes.
yeah, it
But the
is.
thing is that
It's correct.
when you sell, right, this is the amount of money that you need to put aside, the
You have to
cash.
be prepared lah. You have to be
Yes.
prepared that you need to
Yes.
fork out $21,500 to pick
$21,500.
up the shares.
Correct. But
Yep.
in this case, right, for when fast forward to February the 19th,
Mm-hmm.
the stock
Mm-hmm.
actually closed above the strike
Yep.
price,
Mm-hmm.
4240 above the strike price. So
Mm-hmm.
actually the contract actually expires worthless.
Worthless.
So you
Worthless.
get to keep the
$652.
652. Okay. So
30
if
days,
you're
right?
yeah,
Yep.
correct. About 30 days. So
Mm-hmm.
if you look at the ROI is about 3.03% because
Yep.
this is how it's calculated. The
Mm-hmm.
premium that you collected over the commitment that you're prepared to that
Correct.
thing. Yeah. So this is
Correct.
3.3, correct?
Yep. Correct.
Okay.
Yep.
So let's move on again for another buy call. So March the 5th is when the stock has actually moved down again to near the support. Okay. Then we do a buy call again, right?
Yep.
Okay, so I move a bit faster now because I think you understand the concept already. So 133 DTE, strike price 2300, which is below the last done. Add the money here, and I pay $17,990. Okay.
Okay.
So that is my so-called capital for this transaction. Yeah, this position. So fast forward to April the 15th, where the stock actually moved up. I close the position, and I take this premium net of 1.7 here about my profit is this. So for this open and close here, my profit is 81.7. But if I look at my initial capital, remember just now when I first started my trade is 1.6, right?
Yep.
Okay. 1.6 was my initial capital. You will notice that my profit from January transaction, the buy call position, and now March buy call position, my profit is already 3.3K.
You added both together, right?
Yes.
Okay.
Yeah. So I want to accumulate so you can see the direct difference for this buy and sell. Okay. So total, if I add this, is really about 201% because 3.3 over 1.6 is 201%. Now let's move on to the sell call position, sell put, position. Again, March the 5th, instead of buying put, we sell put, right?
Yep.
I mean, instead of buying call, we sell put. Okay, back to again at the strike price. DTE is 27 and not like just now the 133, right? So I sell at this strike price and I collect 613. So this is what I collect. And fast forward to April 1st, the stock again fortunately closed above the strike price of 230. So again, this contract expire worthless and you get to get a premium. So it's 2.07 based on this calculation. And total from the two sell put contract, your profit is only 1.6. Okay.
Yep.
Next two slides are the last two slides that I just share. So because otherwise it's too long, yeah. So fast forward again to May the 13th, okay, when the stock has actually retraced back to the near support again. We enter a buy call and now it's 127 DTE. And you realize here I usually do the third Friday of the month. I usually
The monthly options.
Yeah. Okay.
Because it's more liquid.
Correct, because the volume is higher. And then you look at the Microsoft, right? You look at the volume here is 29 million, 29.6 million here. Yeah. So normally the open interest is very, very high. So
Same,
again,
even the puts is also monthly would be better liquidity.
Yes, correct. I always choose the third Friday. Usually lah. Yeah. So you realize that I put in two buy call contract and not one. Reason is because from my first two contract just now,
I know
right?
what you're doing.
My profit is ready. How much?
Already.
8 over, right? Yeah.
So you are using the house money to trade now, not your own money.
Exactly. You hit a thing. So I buy here. I got thing when I close here, right? I close the two contract at $42 per share, which is at 4,002 times two contract is 8,004, right?
Yeah.
So you look at my profit is 5K. ROI is 149. Okay, but don't forget this is actually 2 months lah, because this is when it reaches the resistance again.
Correct.
Then again, using my initial capital, all right,
Yep.
you look at it, my profit is 8.4, which is
Okay.
actually from January to July when I closed this
Yep.
position, my ROI
Yep.
is 500 over percent.
About half a year lah, basically. Just trading one stock, you know.
Yes, yes,
Mm.
just one stock, just one stock. But if you have big amount, then you can actually take
Actually,
bigger lah.
Lily, if you notice, I don't know if you notice this lah. If you look at all the trades which you trade lah, all the trades, that means for the maybe for now 10 months you trade lah. If you look at all the stocks you trade lah, most of the profits are only generated. Most of your profits are only generated from a handful of maybe 4 or 5 stocks.
Yes,
The rest
yes,
are making 200,
little bit lah.
300.
Yeah,
No,
yeah, correct,
but
correct.
generally you see, if you notice, I notice it that, oh, how come the few stocks which I trade basically makes up to about 40%, 30 to about 40% of all the other company trades, only
Mm,
about handful. So
mm,
again, coming back to so-called stock selection or portfolio selection, right? I think what really traders need to actually do is really try to, how to say, become an so-called expert in certain good stocks. Become an expert. That means that you eat, you sleep, and you dream also on that stock. And you can say that, hey, that stock yesterday price was 330, Facebook price 330, right? Hey, suddenly how come today I saw it's actually 310. Okay, there is actually an opportunity because it dropped to 310 suddenly. Then you actually trigger you to actually go. Then that
yes,
becomes, how to say, your so-called profitable stocks lah. You just focus on the few. The other you just trade
yes,
it for fun lah. You got so boring, right? You trade
yes.
only 5 stocks ma. Then the rest of the time you do what? You trade other stocks lah, just to make additional $200-300 per trade.
Actually, Ming Ho,
Yeah,
I'm
yeah.
trying not to do those unnecessary stock
You
anymore.
you
I
try to
find it's a
even
waste of.
save more time.
After a while, I
Just
find that it's gonna
focus
be a
on
waste of my
the
time lah. Yeah,
ones
just
which gives
focus
you
on
like say
this. I can maybe then
$1,000
in
in
between I can
6
relax,
months.
I can enjoy my Korean drama because I haven't got chance to watch Korean drama at all for a long
Uh-huh.
time already. So
Okay, so
I'm
this is the
trying
tip
to.
lah. Okay,
Yeah,
this
but
is
important.
one way lah. This is one
Correct,
way lah.
correct,
I think it's a good way,
correct.
and of course, for those people who have limited time lah. I mean, technically, if you talk about trading 4 or 5 stocks, just using strategies which you are actually comfortable, yeah,
Mm,
that will be a already very good kind of
mm,
income. I mean,
mm.
additional income for you. Yeah.
Correct, correct. And
Okay.
usually when you trade in good, strong
Mm,
fundamental
mm,
stock, right?
mm.
You actually, when the price drop, you don't worry at all.
Don't
No? You
scared
know that
lah.
you will come up. You will know that you will bounce up.
Ah,
So, and then
okay.
the thing is that the best part is that when this, you know that these are good fundamental stock, and when you
Mm-hmm.
know that, let's say it goes down, you want to
Mm-hmm.
own those stock. You can go in and buy
Mm-hmm.
1 or 2 stock or 3 stock or 4 stock. You know, then
But
the rest of the money you place
some
option lah.
people like the adrenaline that they buy all the meme stock like the AMC and all those
吓
stocks
死人的那种，吓死人的。
uh okay, maybe we
Those
finish this, then we
okay,
go
okay.
to some other interesting
Yeah,
topics.
okay. So sell put. Okay, this one will be
Yeah,
my last slide. I think so.
yeah.
I'm quite sure. Yeah. So so this is sell put, right? Again, May 13 the same. Just now I buy call. Now I sell
Mm-hmm.
put. So at the money again, 29.
Yep.
Why I choose weekly here is because I try to show because in sell position we try to have DTE of less than 30 days, 30 days or less. So I try to show within the 30 days, because if otherwise if I plus another 7 days will be 36. So that's why I purposely show the 29 days here.
Yep.
So collect a premium again 612, and because the volume is very high, so even the weekly run the volume is pretty high and the open interest is high, so not to worry about that. Yeah. So sell put I collect 612 again, and June 11th, when during the expiry, right, the stock actually closed above. So again, you get to keep this premium because this contract actually expire worthless. So if I were to do a direct comparison, right, okay, for these two, right, if I do a buy call or sell put, which is better? Actually, really
Mm.
depends
Mm.
on what you really want.
Correct.
If you are the one who wants to collect in premium and yet don't mind
Mhm.
owning the stock, maybe you want to
Mhm.
go with sell put, because
Mhm.
when the stock drops down, you can actually, if you have a big fat account, you can actually own the
Mhm.
stock at a discount, because your
Mm.
premium you already collected upfront already,
Mhm.
just like what Warren
Mhm.
Buffett did back in I think
Mhm.
the 90s, I think, when he did the Coca-Cola share. He
Yep.
actually sell put to get the premium, then until the stock price dropped.
The
Then
price is not right for him lah. I mean, he wants
yes,
to
because
buy it at the.
yes,
I mean,
correct.
Coca-Cola is maybe at
39.
55
It was
and
39. Then he
39.
valued it
He
at
wanted it
35.
lower lah.
Yeah. So he sell
Ah,
put, and then because he sold, I think 52,000 contracts or something like that, and he got actually $7.5 million in premium.
okay, we don't have that much money lah.
We don't have that kind of money. But at the end of it, when he got it, it's to him it's a
Uh-huh.
discount, because he wanted to buy it 35. But when he sell
Correct.
the put, right, he got the premium. So actually,
Yeah.
after netting off the premium, he actually got the Coca-Cola
This
stock
is
at
this is the concept lah. Get paid while waiting lah.
yes, correct.
Ah.
But let's say if you just want to, let's say, buy call to collect premium, like what I showed just now, the way that it's growing, you can actually do a
Mm.
buy call. Okay.
Yeah.
So
Mm.
and then, but doesn't mean that when you do a buy call, right,
Mm.
you don't have a chance to own the stock. No, not true. Because when you
No,
buy
buy
a
from the
call,
profit
right,
lah. How much
correct,
share you can buy from the profit now?
correct, yeah,
8,000.
okay. Because of this one, you can actually buy the stock.
Mm.
Okay, but let's say
Mm.
later on, let's say assuming
Mm.
right,
Mm.
the stock suddenly spike up. Let's say just now was
Yeah.
400 plus. Okay, let's say it
Yeah.
spiked up to, let's say, 800, double. You actually, when
Ah,
you have a buy call position, you actually can exercise your right.
correct.
You can exercise your right, and then my earlier example, I think, was, I can't remember how much. Let's say
Ah,
my strike price was at 400. Now the strike price is the stock price has gone out to 800. I can
yeah.
exercise at 400,
Yeah.
means I pay for
Ah,
100 stock at 400. When the market price is now 800, then I can
correct.
go out to sell in the
Okay.
markets.
Okay.
So doesn't mean that you
This is going to be interesting lah, because once in a lifetime, suddenly the share suddenly pop like that. Do you know yesterday a share pop like that or not? Double in one day. Do you know
which one?
the Avis car, CAR?
Oh, is it?
It pops
I never pay
double
attention.
the
I think
price
it's
in
on my
one day.
radar.
Then I
Uh-huh.
think it's about 100. No, it's in nobody's radar. Nobody is interested to trade Avis. But
Yeah.
I
Mm.
think it was trading 100 something. It popped up to about 500, 4 or 500. I don't know.
Wow.
It doubled in price, just because they did announce that they're going to put EV into their car rental portfolio.
Uh, but usually before I do a stock,
Uh,
I mean, I also want to
yeah,
look at the trade volume. If the trade
yeah,
volume is like
uh,
700, 500, I normally not that keen.
yeah.
I look at the volume first. Yeah, yeah.
Okay.
Okay.
Yeah,
So I think this is my last slide already.
yeah.
So it really depends on what objective that you
Mm,
mentioned. If you want to own a good business at discount, you may want to sell put, or you want to collect a good premium, then you may want to talk
yeah.
about buying call. Yeah,
Correct.
that's it.
Correct.
Right?
Correct. Yeah. Okay. Good.
Okay.
Good. Good sharing. It's very interesting. On the perspective lah. I mean, from a trader's perspective of buying a call. Basically, it is actually a directional play. You are directional to say that Microsoft is actually going to go up. Yeah.
Correct.
And basically you're just buying a so-called asset at a low value and wait for it to
Mm.
actually go up, and when it goes up, then you actually what is that take the profit, and then if it can continue to go up, yeah, you roll it again and do another time until you see that okay, it's not going up, you stop and rest for a while until it comes cheaper again, then you go in again and you do the same again, right? Yeah.
Yeah.
Buying calls is a directional play. If you have a view that the stock will actually go towards your direction, then it is
Mm.
actually a very great strategy because the profit is unlimited.
Yes, then you can
Unlimited.
double up, because
Ah,
if you're so confident in the stock already, right? You just like
yeah,
what just now, I increased to 2 contract. Then once I collect enough premium, right? Plus my
yeah.
initial capital, I can do 3 contract, 4
Correct.
contract.
Correct.
Yeah.
Yeah.
Otherwise, just diversify to another stock that's similar
Correct.
in
Yes.
nature. Yeah.
Yeah. Okay, good. So of course the other side of it, which is actually selling put, I would say it is actually not to say it is not a good strategy because the returns you see are actually lower. In fact,
Yes.
I personally like to use selling puts myself more than buying calls. Okay, because why is it? Because I want to generate income. You see, I mean, it's like let's say for example the Microsoft example you have shown actually, right? So
Yeah.
every time you actually do in within 30 days, you are actually
Get the
collecting
income.
about $600
Yes. Yes.
technically the strategy is actually a very high probability strategy, which you can actually
Correct.
go in with 80% probability of profit. And of
Mm.
course when the time continue to go I mean when the time pass lah, your probability
Mm.
of profit goes up when it doesn't go down. That means eventually it will continue to go up from 80 to maybe 85 then to 90, and probably by the time 1 or 2 weeks to expiry, your probability is already 98%. So it's like a
Yeah.
sure win one. Of course, you got to choose stocks which are
Strong.
also fundamentally strong
Yes.
in order
Yes.
to actually get that high probability and to have that
Yes.
consistent kind of uptrend
Yes.
intact.
Yes.
Yeah. And even if it falls, even if it falls, I am also safe because it has to fall below my strike. Yeah. I already have a
Mm.
buffer, correct?
Yeah.
When I enter the trade, I already buy below market. So the price
Yeah.
have to fall all the way to the lower strike in order
For it
to
to be
me
assigned.
having the risk to actually take
Mm.
up the stock. Correct.
Mm.
Yeah.
Mm.
And the other thing, of course, the reason why I also do a lot of sell puts is that if you actually do it on a fundamentally strong stocks and at the same time, when the price actually drops down even below your strike, and you do not actually want to buy it, you do not want to actually take assignment of the stocks. What I normally do is I just roll the contract for another month. I collect more premium. Yeah, because if the stocks is still around that, even if it goes in the money, below in the money, you can technically still roll it for 1 month to get premium. Maybe not as much as the first round of $600 over. Maybe you still can get $300 or $400 by actually rolling the contract forward. And then
Mm.
you just wait, just wait for the stocks to actually go up back above the strike price which you actually enter.
Yeah. And usually for fundamentally strong stock, let's say like Microsoft, right? Even like this round, you seem to lose a bit when you
Mm,
roll the next month. Sure, the stock
mm.
will go up. One.
It will go up one. It
It's
will go
really
up
crash
one.
for months and months. I wish it's not
Yeah.
not likely lah. Yeah.
I seriously I have actually rolled stocks for 4 months, 4 months.
But are
I,
those
I
like
do I do on Baba I'm still rolling.
oh, Baba? I don't know what happened to Baba. Don't talk about Baba.
You saw
I
Baba
own. I still have some Baba stock.
Baba I think I was rolling I was actually rolling at strikes of the last one which I got out of it I was actually rolling at strike 165.
Mm,
That means I did some puts at 165, right? So then you
mm.
remember it actually dropped to about
Yeah.
1 3
Yeah.
something
1 4
lowest.
something. 1 3 something. Yeah.
So at that time we were all rolling, continue to roll it to actually get premiums continue to get premiums So I think that one I did about 2 over months 2 over months. Then I got out of it. I still have some at 175, which is now
Okay.
which was actually coming close to reaching 175 before it dropped again in the last week.
Yeah.
But I'm
Yeah.
bound we go back up But so
Yeah.
so that's
Just
why
hold it.
I said, I mean, as far as so-called risks are concerned, right? It depends on how deep you actually really know how to actually use the strategy. If you really know how to
Mm.
use the strategy, assignment technically is actually not something for you to actually be fearful of. Yeah.
Correct. 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 You must choose the right stock lah, so you don't have to worry at
Mm.
all. Yeah.
I
Yeah.
also got bad stocks, which
You have so many stock. They're not all, I see your list also very frightened. I look at it
uh,
also frightened.
okay. I'm going to share a very interesting one, which is a hybrid to what you do one,
Okay. Okay.
which
Interesting.
is a
Let's
hybrid.
let's watch. Let's
Okay.
watch. Okay.
Let's see this hybrid It is in between buy call, sell put, and sell call.
Okay. Buy call, sell put, sell call. Okay.
Yes, we have
Okay. Buy
everything.
call, sell call is really
It's like
vertical.
it's like a salad. It's like a salad.
Okay. Okay.
Let me see. Eh? Oh, okay. Here. Okay, can you see? Oh, no. Oh, yeah. Wait.
Yeah, I can see.
Can see this,
Yeah.
the full screen, right, with the charts and everything, right?
Yes.
Okay, so this is actually one trade which I have just recently done on this 29th of October. Okay, this is actually a trade on Starbucks. Starbucks,
Ah, okay. Starbucks.
okay.
Okay.
So what happened? Starbucks did their earnings announcement. Okay,
Mm.
so post earnings, I actually enter into the trade the next day after earnings. It's a post earnings trade. So after Starbucks made their announcement, the estimate was actually 997 EPS. Yeah, and the actual which actually came out earnings was actually $1. So technically, it is so-called on target or slightly better than target, right? Correct.
Correct.
Yeah, but
Correct.
the price actually crashed. You see, the price actually crashed. I think about $8 here. The price actually
Wow. Okay.
crashed about $8 here, dropped down all the way to from I think from 112 to 104. Yeah, it's about
Mm.
eight bucks.
Mm.
Okay, yeah, about $8. So on that day, of course, what I did was okay. Starbucks generally, you see the trend, right? Is actually quite strong one, ma. You see, it's actually going upwards, right? And of course, during
Mm.
this time, it was actually going sideways,
Yep.
and suddenly because of the
Drop.
announcement, it actually crashed. So for
Mm.
me, I think certain levels they have a support at certain levels. You can actually see
Mm.
at this level there's actually one support. You see all at
Mm.
this EMA there's one support, and then even
Mm.
if it actually goes down, this was actually some lowest level where it actually went
Mm.
down.
Mm.
So I don't mind to firstly I don't mind to actually sell a put on Starbucks, sell a
Mm.
put, which is
Okay.
what you actually covered, selling put, right? So
Yep.
this selling
Correct.
put is actually at 95. Current
Yep.
share price is actually at 105. Current share price,
Mm.
it dropped to
Okay.
105. I
So you
did
sell
a
put at
trade at
95.
95. So
Okay.
basically, this is
There's
actually,
buffer.
I'm actually doing a 10% discount
Yeah.
from the current share price, which
Mm.
has already dropped close to 7%.
Mm. Mm.
Correct or
Correct.
not?
Yep. Yep.
So technically, from the price where before it dropped to here, right, it's already going to 95. It's going to drop by 17%. When
Mm.
before it reached my sell put. So for me,
Mm.
okay, 95 is going to be a safe zone.
Mm.
It won't come. Even if it comes, I don't mind to actually buy
Mm.
Starbucks at 95.
Mm.
Long time it never go at 95 already. Yeah. So
Mm.
I did this, which is actually 17 December, which is actually about 40 over days expiry. Yeah. I collected
Oh, okay. Okay.
78 cents.
Okay.
78
Okay.
cents. Okay.
Mm.
Then I said, okay, 78 cents is actually I have a credit now. So
Yep.
I said, okay, if Starbucks actually came down, there is no reason why it should actually come down. Market simply just throw it down. I know the market manipulators are because it only do 0.003 cents better. The market manipulators would actually just trash it down and
Mm.
eventually would actually pull it up. Yeah. So
Mm.
I said, okay, I have 78 cents on hand on credit. What kind of trade can I actually do in order to get further upsides
Mm.
besides actually just getting this 78 cents? So what I
Ah,
did
okay.
was actually buy a call like you buy a call.
Ah,
You see, I
okay.
bought a call at 105, right?
Yeah. Yeah,
So I
correct.
bought a call at 105. I paid 272.
Mm. Okay.
272. Okay. And of course, when I paid 272, that means I have infinite profit going up, correct?
Mm. Correct, correct,
So
correct.
being a stingy trader, I said, why do I need to actually pay 272 to buy a call to have a infinite upside when Starbucks would probably not go anywhere above the previous price before it came down, right?
Ah, okay.
So I said,
Okay.
okay, in 1 month, technically it won't go up to $130 or $140 one. So in order to save cost, I sold a call. I sold a call at 115. I sold a call here.
Okay.
So I
Okay.
buy a call here. I sold a call at 115. So basically, what it means is that I kept my profits to 115
Correct.
Yeah.
Correct.
I
Yeah.
say it won't go up above 115 So I kept
Yeah.
it
Yeah.
off. So I collected another 44 cents. So for these two trades, I actually paid 228 for the spread This is actually what we call a spread.
Spread. Yeah.
We buy a call at 105. We sell a call at 115. So this is actually a bull call spread. So this is actually a spread which I do. And then of course I
Yeah.
was actually holding 78 cents on the
Sell
what is
put.
that on the sell
Sell
put
put.
side, right? So I actually use that to finance my bull call spread. This is my debit trade which I need to pay the market, right? I said I don't want to pay I want a discount give me discount. And I use this to get a discount yeah.
Yep.
And at the end I only pay for this
Pay
trade
it
at 150
$1.50, is it?
compared to 228. I paid 150. So basically that gave about another about 30% discount, you see. So I get discount from the market, 30% on the debit trade. And of course, within the debit trade itself, I got another 44 cents discount, right? Yeah.
Okay.
So
Okay.
I actually got into a very what do we call this? A very cheap entry trade, which of course, in order to actually profit quick on this trade, I need Starbucks to actually jump very fast, and because it has a very fast drop of $8, sudden drop here.
It went up already.
And
Yeah.
of course, the rebounds, to me, it is actually very imminent, because
Yep.
technically, you see, this is already a market manipulation play. That it actually
Mm.
comes down to one of the previous support level, touches. You see here, it actually touches
Yep.
it.
Correct.
Yeah, and then basically to take out all the people's stop loss, which entered into here the people who actually entered trade, they take out these people's stop loss, and then basically after that they will pull the price up. So this is actually what I did, and I think after 3 days in the trade, I did it on Thursday. This is actually Thursday. Yesterday midnight the 12:32 a.m. I actually sold.
Oh, you close it.
Sold. I closed this part only.
So profit
So,
is?
profit is actually 550 minus 150, which is actually $4.
Wow. Oh, pretty good.
So
Yep.
profit is
That's
actually
very good.
$4, and I entered the trade at 150, right? But don't forget, Lily, I still have this 78 cents sitting here,
Correct. Correct.
95, and currently the price have actually gone to 112, 111 already. So technically,
This is
I
really
now
yeah.
I wait lor. So technically, I wait another maybe here maybe another two weeks max 2 weeks max. Then of course the decay here will actually be very fast. Currently
Yep.
this
Yep.
trade I already made about $40 over profit.
Yep. Yep.
So there's
Correct.
another $30 over here, which if I wait for another 2 weeks, probably I will exit at $5. So this trade again, probably I get a 70 cents profit.
Wow.
So my profit is going to be $4.70 over a entry of 150 .
That's good. That's good.
Yeah. So this is actually what I call a cheap entry trade .
I mean, yeah, I mean, this one,
Uh,
the person must be like yourself, very skillful, know what to do. Yeah.
is
Yeah.
okay one, because if you break up of the things in what Lily you taught, right, is on the call side. If you actually understand how the call operates, and if
Yep.
you
Correct.
actually understand how the put operates,
Yep.
then you can actually combine this kind
Correct.
of trades to become another strategy. And this strategy, of
Correct.
course, I love this strategy because it's actually called super bull. Is it?
You name it Super
It's
Bowl.
double bullish, because the call
Yeah.
is
Yeah.
the put.
Yeah. Because
The
sell
put
put and
is
buy call is really bullish.
and
Yeah.
then the call spread is also bullish. So it's actually
Correct.
a double bullish, and you actually enter this trade with this kind of setup. Is actually the best entry. Yeah.
But this one must have like such a situation, then you go in lah. I mean, if like normal,
Uh,
then it'd be a bit more
if
difficult,
yeah,
right?
you have, that's why it
Yeah.
is actually a so-called circumstances like this
Yep.
that you can actually, the price have already dropped a lot, then you
Mm.
can actually set up a put below.
Mm.
Okay, and
Mm.
second
All right.
one is that you feel that the bounce is actually imminent, and
Mm.
of course it can be a setup like this where you actually see that it actually comes to a support prices in the past, or
Mm.
also it comes to a so-called moving average support lah. Also possible, because once it goes to a moving average, it can also
Mm.
bounce one. It can also bounce
Mm.
one. Yeah,
Correct.
it can
Correct.
also bounce a lot
Mm.
nowadays, especially if you look at the earnings this month lah. There is
Mm.
actually a lot of stocks which actually come to this type of setup, because you see something different this month's earning as compared to the previous months is that a lot of stocks without any reasons get trashed after earnings.
Yeah. Sometimes it's just a market just like that. Even though they are doing profit, they're doing well. The stock just reverse. It's
it,
like
it,
that.
it's just get trash. You can see some of the things which of course I'm also having an eye on some of these stocks lah. You can see, like for
Mm.
example, let's see what stocks are. I don't know if you have actually seen
No, I'm
this.
not looking. I'm not seeing anything now.
Okay,
Okay. Yep.
so this was actually Starbucks lah, and
Starbucks.
then
Yeah.
what other stocks get trash?
I didn't pay attention to the
Okay,
earnings this week.
TXN was
Oh,
also
Texas. Texas.
yeah, TXN
Oh
was
well.
one
Yeah. Drop.
which actually
Mm.
get trashed after
Yep.
earnings.
Yep. Yep.
Earnings is not that
Wow.
bad. I think they're also meeting earnings. They get trashed.
Mm.
But for
Looks like good
TXN,
entry. Yeah. Mm.
yeah, but for TXN, I am actually a bit careful, which I would
Mm.
probably not. I won't do. I won't do
Mm.
that type of trade because the TXN price movements tend to be very slow and very choppy one. You see the
Okay.
price
Okay.
movement
Okay.
very slow and very choppy. So for this type of trade, if I actually want to do, in fact, I actually entered lah. I just did a bull put spread below,
Okay. We'll
because
put
bull
spread.
put spread you
Okay.
can actually have a lot of time. You can just sit and relax and wait for it to go ma. So I did bull
Mm.
put spreads at strikes below. I think it was probably at 175 or something,
Yeah
way
lah. Way
below
out
lah.
of the money
Yeah,
lah. Way out of the money.
yeah,
Yeah.
yeah.
Mm.
Then you can collect. I think normally when I do bull put spreads, I collect about 30% of the max loss lah. That means if I'm doing a $5 width, right, I want to actually collect about $1.
Mm.
Yeah, about $1 or slightly above
Mm.
$1. Normally, I will
Mm.
get about 25%, about
Mm.
$1 for five width lah. Yeah. So you do this, then of course you wait lah, because it can be choppy. As compared to
Mm.
the earlier trade, it is imminent. Then you do like what I did, the Super Bull.
Mm.
But if it is not imminent, then this type of trade you can do bull spread. If you do call, it's very painful lah.
Yeah. 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 Yeah.
The
Because
decay will
it may
kill you
come down
before it
also. You're
goes
not
up
too
lah.
sure.
Huh?
Yeah.
Yeah,
Especially
yeah,
certain stock where they don't move much, right? Don't do
mm,
buy call. When you do buy
yeah,
call, it's painful. Yeah. It's painful.
yeah. So
Yeah.
what other stocks get trash? TXN is one. The
Actually, what is
others
a TXN? What's the volume?
volume. Let me
Mm.
see. TXN.
Mm.
TXN volume is about wait, 414,000. It's
Oh.
quite liquid also. It's quite liquid also. Yeah.
Okay.
It
Okay.
has a three star ranking. Three star
Mm.
ranking.
Mm.
Three
So
star
open
ranking.
interest wise, enough lah.
It's okay. It's okay.
Okay. Okay. Okay.
Then okay, Amazon again. You see that it actually get trash, right?
Yeah. Yeah.
Okay.
Yeah. Yeah.
Okay, Amazon, I have not done any trades on this. I was trying to actually enter some trades. Again, for Amazon, I'm also looking at doing bull put spreads, at the level of about the lowest level here, something about
Mm.
3,000. That means I'm
Mm.
going to sell a put at 3,000, buy a put at 3,010 probably.
So you have
which
a
is
spread against you. You have a
which is a spread again,
Mm,
which is basically about one standard deviation.
mm,
I think slightly above one standard deviation. I
mm,
think it is
mm,
about Amazon.
mm,
Amazon basically December 17, 3,000 would be even be about 1.5 standard deviation, which is
mm,
gives a probability of about 87%.
okay, okay.
87%.
Mm.
Yeah,
Usually for
87%.
big ticket item, like this or
Mm.
big ticket, I think
Yeah,
is also wiser to
yeah,
buy a spread because in
yeah.
case touch wood, and
Mm.
luckily or unluckily you are assigned, then it's a
Mm.
big account. Yeah, you really have to cover a lot of money. Yeah, so it's
Okay.
always better
But if
lah.
you're doing a spread, you are safe
Yes,
lah. If you're doing a
yeah,
spread, don't
yes,
do
usually,
naked. I don't dare to do naked.
yeah,
I
yeah,
won't
because
do
this is a big
naked
ticket
for
item.
this
Don't do
because this
naked,
is
no matter what, just for
300,000
spread.
eh. I sell my car, sell my
Yeah,
house also not enough.
times yeah, times another 20 and 330. Your car is not
Don't
enough
do naked.
itself.
Do a spread is okay because at the end your loss is only the width
Yeah,
of
big
the
ticket item
spread
always
less
go spread. Yeah.
your thing. Yeah, and
Yes.
then of course
Mm.
what other stocks are okay TSM going sideways are difficult to actually set up trades for TSM lah. TSM cannot lah.
Yeah, TSM
Uh,
is like it's not moving
it,
up
it's
now.
a
Yeah, it's
it's
just like very bad.
I don't know the thing is actually going sideways lah. But even if it's going sideways, it is difficult for me to actually
Mm.
do spreads on non-neutral spreads like iron condor neutral.
Yeah,
It's
a
also
bit difficult
difficult
lah
to
to
set
trade.
up
Yeah.
because the
Mm.
IV is actually quite low now for
Mm.
TSM. Yeah.
And you
So
realize that even though it's going on the side right, the movement right up down is getting
mm,
narrower. Yeah,
yeah.
getting narrower. So it's quite difficult. Yeah.
Yeah, it's IV is only about 26%. So 26% is
Mm.
actually hard to get premium. I mean, for those viewers who actually want to, Ken is here. Ken, which stocks you want? Which stocks are you eyeing on? Let's see.
Is
Whether
that
can
go-go?
or cannot. Go. Ken wants to actually go. Ken is actually always eyeing on a lot of sure win stocks. Ken.
Yeah, yeah. He's an
You
Amazon
give me
bestseller
some
or not,
sure
Ken?
win lah, so that you also give me some pointers so that I can structure out some options trades using your sure win stocks. Or Lily can see whether this one can buy call or cannot buy call.
I think Ken is better than me on that. Oh, Ken.
Uh,
Yeah.
okay, Ken is another fellow trader
Yeah.
who is actually very good in stock selection and
Mm.
also
Predicted the crash.
also knows how
Yeah.
to predict when is
Yeah.
the lowest and when is the highest of the markets.
Correct.
Yeah.
Yeah. Correct. Yeah.
So we need to rely on each other in order to actually get the best out of all traders lah.
Yeah. Right. 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 Mm.
Yeah. So I mean it has been fun lah. I mean talking to a fellow trader and looking at different kind of viewpoints and perspective
Yeah. Correct.
on trades lah. Yeah, because there is actually no one style or no one strategy that can actually
Correct.
fit everybody.
Yes.
It
Really
depends
depends.
really on
Yes.
how
Yourself.
you are, how much time you actually want
Yes.
to spend, and
Yes.
also how much capital you have.
Correct.
It also influences what kind
It's
of trades option strategies which you actually use to trade. Yeah.
absolutely agree. Yeah.
Mm,
Absolutely
mm,
agree.
mm.
So, anybody have any question?
Okay, so for those who is here, if you have any questions, is free to ask, and of course, if we know how to answer them, then of course we will try our best to actually answer them lah. Yeah, but
Yeah.
if you ask me whether today this stock can actually go up or not, okay,
I can tell
50-50
you.
chance lah.
It's either
Always
up or it's
it's
down.
either up or down, 50-50
Okay.
chance only. Yeah. But of course, if you apply the right strategy, you can increase your probability to higher. Like just now, those trades
Yes.
which I do, I can increase it to
Yes.
80 or 90%. Yeah,
Yes.
using option strategy. If you just buy stocks, 50-50 lah. Yeah.
Absolutely. Yeah.
Mm, mm.
Okay.
Okay, so Lily, you have anything else you actually want to share with the audience today? And
No, actually nothing already, because it's just that depending like what you said just now lah, uh everybody, all of us have a different strategy. It so depends on our time, the capital you have, and what you want. You know, some people enjoy income upfront. Some
mm,
people, maybe want to, do a certain strategy. Don't mind paying first and wait a little bit longer. So it really
yep,
depends. But
mm,
importantly, I think for you and I, whatever we share, whatever strategy we mentioned
mm,
just now, most of
mm,
the time we focus on
mm,
strong stock and strong
mm.
businesses, right? Yeah,
It's
because
give
I
more
think that's
certainty lah.
fundamental.
Yeah, you don't need to
Yeah,
guess so
correct,
much lah. Huh?
correct. So because we know that these are the ones that it is pretty confident that it's always moving up. So with that
Mm-hmm.
one in mind, we are quite comfortable, I would say. Once you trade, then we are quite comfortable whether move up and down. We are not really that concerned really. Yeah.
Mm-hmm.
So that is, I
Mm-hmm.
think, the fundamental that we as option trader, and I believe in a lot of those value investor, right? They actually go for that as well. So I think that is really fundamental for us. Yeah.
Safety first.
Yes, 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 yes.
So options trader are not risk takers,
Okay, yes.
We
Right.
know what we are doing. If you
Correct.
don't know what you are doing,
Totally.
then you got
Yeah.
to contact Lily or myself.
Yeah, you can
Yeah,
write in any
so that
question.
we
Yeah,
can
then we can
actually
revert to you.
teach you or just give our perspective and just to make sure that everybody trades in a proper way, and not risk their hard-earned money lah. Yeah.
Yeah, yeah. Do it once you do it properly, you're okay lah. Should be okay. Yeah, not to worry that much. Yeah,
Yep.
yeah,
So those who actually come and trade options one, I mean
yeah.
they're stuck to it lah.
Try not to tikam lah, no? Don't tikam. Yeah.
Yeah. So okay,
Okay.
it has been a good session
Thank you.
with you, Lily, and
Thank
I hope that
you.
in the future we can actually
Yes.
do more of this session,
Thank you.
so that fellow traders amongst us can also share with each other,
Yeah.
and also the audience more perspective coming from different people, because if you look at the show just now, right? I mean, Lily is actually coming from a perspective of more into actually doing calls, right? Buying calls, because she really believes in fundamentally strong stocks, that it is technically more or less a so-called high probability trade that she actually enters, and then she exits
Mm.
and she continues to actually roll
Yeah.
and do it. Yeah.
Correct.
Whereas
Correct.
for me, I am a different kind of trader. I actually want to take opportunity on shorter terms, in and out, to actually trade the markets. So it's actually a different kind of perspective. But
Mm.
both sides, I mean, would have their own. Both sides have their own wins, lah. I mean, it
Yes.
is not
Yes.
to say
Correct.
that I'm better than Lily or Lily is actually better
Mm.
than me.
Certainly.
It's only
Certainly.
different
Yeah.
perspective. I spend more
Yeah.
time doing it. Probably Lily spend less time doing it. Yeah,
Yeah. Yeah.
correct. So thank
Yep.
you so much. I
Thank
hope to connect with
you.
you guys again, and for those who have actually came into our trader stock today sharing session,
Do like and
I
share.
hope that you do like and share, and I hope that you have actually
Yes.
benefited from our sharing session today. Yeah.
Give us a
So
heart if you have enjoyed.
uh,
I have
yeah.
enjoyed.
So thumbs up for Lily, the Kai Shi Koi trader, and Ming Hon, the
Thank you, Ming Hong,
normal
for
trader.
yeah, and thank you all of you for spending time with us and watching
Okay,
our live show.
okay,
Yeah,
thank you. Bye bye.
appreciate
Thanks
it.
up.
Have a good night.
Bye bye.
Bye.